Alrighty. Everybody, welcome to the Watermark Life Make Your Mark series presentation, Marketing LTC to Women with Lincoln Financial. We are joined today by Lee Superville. Lee, again, thank you so much for your time, for joining us today. Today's a crucial topic and a very important topic because really this is a product that maybe not everyone is fluent in. And our goal is to, really start today's presentation with you understanding a certain amount about LTC, and really specifically marketing it to women, and to get out of this conversation just emboldened and sort of ready to hit the marketplace with this information. Again, if your cameras are already on, we appreciate that. If they're not on yet, toss on a shirt, clean up the background, get up on here. We want to have a conversation with you guys, and we want to know, again, boots on the ground, how this conversation is going for you. Nicole, this is your brainchild, the entire Make Your Mark series presentation, but this one specifically, Marketing LTC to Women, was something that you and I talked about from really the get-go of launching this entire program. You're a woman, so you have a certain perspective on not only being sold products, but selling products to women. Tell me about this marketplace and about this conversation that you have, and Lee will start in just 1 second, but I'm curious, Nicole, how you approach this conversation, just, basically.
Yeah, no, I mean, I think it's so important, this conversation to be had with women. I think most of us already know that, long-term care events primarily affect a woman more so than men, in the sense that we live longer. So we're more at risk. For sure, the statistics prove it, that the longer we live, the more opportunity we have to have a qualifying long-term care event. And with that being said, it's so important for me. I know in my own practice with selling, to either friends or clients or my agents or whatnot, but sorry, I think we're having 1 second.
Oh, no, all good, all good. Yeah, that's on her end.
Oh, okay, sorry. Anyways, I always try to stress the importance, to my clients and whatnot on, hey, have you had these conversations with your husband, and who is going to be providing that care? Do you want it to be a child of yours? Do you want it to be a loved one? Are you looking to go away to a home? Or are you looking to receive the care in your own home? And so, long story short, I just really can't stress the importance of these conversations to have with your clients on the day-to-day basis. I know they're tough conversations, but I'll tell you what's tougher is when the actual qualifying event happens. Yeah. You're stuck between a rock and a hard place, and you've now left your client with really no great options, and it's unfortunate, and I've seen it happen too often, unfortunately. And so I think it's just really important that we try to push ourselves to be in those uncomfortable situations with our clients, and stress the importance of, hey, we really should be talking about these conversations with them, and making sure that at least we've covered and uncovered that, that stone for them, and we've at least discussed these options for them, so that they can't turn to us in later years and be like, hey, why was this never discussed? And why am I having to care for my husband right now, or my mother or my father? This is so uncomfortable. Like, I wish I would have known what existed out there. So
Nicole, a great perspective and great point. And one thing I'll just add before we get into a few poll questions is, we gave a presentation 2 weeks ago on using qualified dollars to fund asset-based LTC with One America. And Brent with One America made a really great point, that specifically with long-term care, the absence of a plan is a plan itself, and that plan is self-funding. And so to your clients, conveying the idea that if you don't, figure this out now, it's going to be figured out some way later, and it's probably going to be a harder scenario then. That really stuck out to me. Before we hop over to Lee, Nicole, we have a few poll questions kind of just to get the conversation started, and really to gauge everyone's comfort level with marketing LTC to women and their understanding of the product.
Yep, so I'm going to launch the polling questions. There's 4 of them, you guys. I'm going to give you guys just a few seconds to answer them, and then once I see that everyone's completed them, we can review the answers together. So go for it. I'll let you guys complete them right now.
And Nicole, I'm going to be completing these as well, right?
Yeah, absolutely.
All right. Just want to make sure.
Yes.
And guys, as you finish as you finish these poll questions, I just want to remind you, if you have any questions or anything, raise your hand or unmute yourself and pause us. We want this to be completely interactive, and we want you to get as much out of this as possible. So feel free at any time to let us know you have a question or a statement. How are those coming in, Nicole?
Yep, we looks like we're just about finished. It looks like we're waiting for the last person. All right, I'm gonna go ahead and end the polling, and let's review them real quick. So the first question, do you find it important to discuss long-term care with women? Yes or no? 100% yes. Great, that was the answer I was looking for. So thank you.
If anyone said no to that, this is not the webinar for you.
You should not be here this morning. No, great job, 100% on that. Question number 2, do you know any factors that make women more at risk than men? And a lot of you agree that women are more at risk, 87%. And then let's see, question 3, do you struggle bringing up the long-term care conversation with women? 33% of you said yes, you are struggling with it, and 67% of you said no, that you're handling it just fine. Question number 4, do you know of any long-term care solutions that are available to pay for long-term care expenses? And 87% of you answered yes, and 13% of you answered no. So interesting.
Okay, good.
I'm glad for those of you who answered no to that question that you're here with us this morning to learn how we can help you with that.
And one thing to say is whether you answered yes or no to bringing up the long-term care conversation with women, our goal here today is really to give you the tools so that even if you were comfortable before, it's now just an easier conversation to have and some better entry points. And with that said, we're going to turn this over to Lee, Sales Vice President for Lincoln Financial. Lee, again, can't thank you enough for joining us and getting your computer back and working. We're good to go. We're on all cylinders. Lee, take it away, my friend.
Thank you, John, and thank you, Nicole. Again, I appreciate the invitation to be here to get a chance to talk to all of you, because I know the expertise that are in this room, and I've obviously got a chance to work with a lot of you for many years now. And this is a very relevant and important topic, not only in the industry itself, but more importantly to MoneyGuard, right? And I'll kind of get around to why that's the case, or hybrid products in general. I'll get around to why that's the case here in just a little bit. But a few reasons why I think this is relevant, why we're talking a lot more about this as of late, or more people are gravitating to the conversation as of late, is one, that the connotation. I think the connotation for LTC has been improving year after year just because there's more solutions out there. We'll talk about those solutions closer to the end of this presentation. But also it's becoming more of a household name as well, right? People know that LTC is something they need to have, and more people are experiencing it. So it's actually easier to have this conversation. And of course, it is a bit of a different conversation when you are talking with women, which is obviously the focus for our call today. But of course, just having more choices for LTC, like I said before, and then also being able to customize your conversation. And I think there is a certain way to have the LTC conversation. There's a certain way to have this conversation. And MoneyGuard fits very well in this area, mainly because we have individual policies. So instead of just doing a blanket $5,000 a month benefit for her and also for him, we can actually put together something that makes more sense for both individuals. So, and before we get started, again, I love the polling questions. I like how you kind of simplified it as well, because there's a lot of conversation that we're going to have today. And again, at the end of the call here, we're going to go over the different solutions, and I'll show you why MoneyGuard can be a better alternative or a more dynamic choice when it comes to long-term care solutions. And I'll go through some of the advantages that we currently have with the solution as well. So there's obviously a lot of great things to talk about. But I'm going to start with the first polling question that we went over, which essentially is around, do you think it's important to talk about long-term care with women? And actually everyone got that question right. So Congratulations right there. But I do want to go over some some more reasons why that's actually the case to kind of help facilitate the conversation here for everybody. All right. So again, talking about long-term care with women, there's obviously some things to consider here. So let me kind of break this down for everybody. Basically, there's about four, we'll go and say about 5 different areas as far as why this is actually important for women to have this conversation, or for you to have them with them. And these are the 5 right here. One being rising dual income for households. So with more, obviously, women with their income in that household and using that to invest and be part of the financial structure. They're also taking on the liberty of realizing what's important to stabilize their portfolio, to maintain wealth management, wealth protection, I should say, more importantly. So we're obviously seeing that happen more and more as years go on. Another one being female investors are joint decision makers. I think
Yes, we are.
I was gonna say, I think we're all aware of that. So. And obviously, you have women that do rely more on advisors. This one's kind of phrased a little bit oddly. I like to rephrase this and say that I think that they're more accepting to advisors and that kind of breadth of knowledge that they have. And women do value long-term care. We're actually going to get a little bit more into that, more than men, excuse me. And then in some instances, women are the family nurturers. So they see, again, long-term care being more of an important topic earlier on, right? And I think we can say that for everyone, but a lot of times people might push it to the back burner. Women are a bit more pragmatic in this conversation. So usually they are more open to having this a lot earlier.
They see the implications of it.
Consequences.
Yeah, exactly.
Right. Yeah, exactly. And then there is the number one area why it's important to have this conversation with women, and everybody already knows this, but I gotta address the elephant in the room, right? Minimizing the risk of asset depletion. But and of course we have that conversation with everybody, but of course that is the number one reason. All right, so going on to, and this goes a little bit more into like the second polling question, if you remember. So like what is kind of different with talking to women than it is to men? And there's actually 3 different areas. One's actually going to be for biological reasons, okay? Increasing risk for females, or in other words, females do live longer. And what we say in long-term care is, the longer your life, the more you're going to be at risk for becoming frail. And of course, long-term care is what's going to be going on there. The second area is gender bias expectations about caregiving. I think John might have said it earlier already, that there is expectations that that they'll be the nurturer, and then also there can be some relative or subsequent mental and or physical issues with that. And then 3 is financial risk of needing and providing the care, which is kind of what I was kind of getting around to. So at age 65, women do have a life expectancy of about 23 years, or 23 more years, excuse me, at age 88. And then more than 2/3 of long-term care population is in both nursing home and residential communities are women. So they basically take up the majority of that area for a longer period of time. And just like I said, women do need care longer than men. I believe the number is about a year more time as far as needing more care than men. And this is
just curious, sorry to interject. Typically, what are you guys seeing over at Lincoln, and what are you recommending for how long of a coverage period for long-term care need? So the benefit period, how long?
Yeah, that's a fantastic question. So I'll address that in 2 ways. Yeah.
Oh,
so
I thought I was jumping the gun. Sorry.
Yep. No, this is great. I want to keep it more conversational because I think we get a little bit more out of it that way. So please interrupt
Yeah.
me. So right now on claim, and this is for men and female, or male and female. The average length of the claim is about 3.5 years. If you know MoneyGuard before, or MoneyGuard 2, which is technically still in California, the sweet spot that we usually run with these policies is 6 year. Now, that's still the case. However, what we're also seeing is that more people, when they go on claim, they start out at home or some sort of home health care. It actually jumped from about 60% to about 75%, I think, in the past 2 years. So that's actually creating a longer benefit period that's needed. So we'll probably see that 3.5 years get a little bit longer. But with the product specific MoneyGuard 3 and how that works, normally what we're looking at is either a duration of 4 to 6 years. And that's usually the policy that we put together. So I just remember that 4 to 6 years. And the reason why is because for MoneyGuard, you can go on and off claim. So if something were to happen earlier on, let's say like in your 60s, and you technically do need long-term care, you can use the policy for a couple months, but then go off claim, and then you can use it further down the line. But I would imagine in about 2 or 3 years, the average length of claim would probably get a little bit closer to 5 years, as soon as 2 years or so. So.
Okay.
All right, and then the slide in front of you again is just showing you the women do take up a majority of adult daycare centers, home health care, hospice, nursing home, and residential care communities. Now, usually when I go through this presentation, this is the one where I kind of get some head nods or, oh, okay, I didn't exactly know that was the case. And it's the issue around Alzheimer's disease and dementia. So of the 5.2 million in the US over the age of 65 with Alzheimer's disease, 3.3 million are female. So obviously a greater majority, and there's a lot of things leading to that. Obviously they're living longer than men. We get that. There's cardiovascular health and senior years. That's also a factor. But it is simply genetics as well. So another thing to kind of keep in mind, or another note just to kind of add in there to kind of put this in perspective, is that once diagnosed with Alzheimer's, females normally have this cognitive disease for about 1.5 years longer than males. And it's good to talk about Alzheimer's disease just because that is a growing factor, and every year is actually dramatically growing as one of the leading causes of death. But more people have experienced this in some sort of way. So giving them a little bit more information, even if it is more factual, which is kind of a balanced approach to this, is still going to be very beneficial for them. I guarantee a lot of clients that you may talk to in the future do not know about some of these statistics. And we'll actually just jump to this slide because this does a better job at kind of wrapping up what we're talking about here for the first polling question. But again, there are gender bias expectations about caregiving. Of course, there is physical stress, and a lot of times, if you talk to someone, I always say, "Can you physically pick up this person? Can you physically walk with this person?" Right? I think it's a very normal question to ask, and sometimes that's not the case. We actually had an individual that went on claim for MoneyGuard, and of course, they factored in what home health care would be, or a home health aid would be, and I think back then it was about $21 per hour. However, when they went on claim, they actually needed to pay for 3 different home health aids. So that increased from obviously $21 to $63 and per hour, just because the individual needed extra help just moving around the house. So obviously things to take in consideration when it comes to physical ability and stress, but obviously there's also a mental factor in there as well. Most people that are caregivers, and especially if it's not their profession, they're going to be more liable to experience some sort of depression and things of that nature. So it's something else to keep in mind, and more of a reason to make sure that you have a plan. right? A lot of times when that individual is the caregiver, they don't have a plan, right? I think John kind of mentioned that at the beginning there very well.
Yeah, I would become extremely depressed if I had to caretake for my father. First and foremost, my sheer strength would never be able to do that. Like help him get better, you know, the mobility part of it, but then also just I think the embarrassment on his part, and then also me not necessarily wanting to do specific things right. It's just a little awkward. So I again can't stress enough the importance of having these tough conversations with your clients.
I'd like to share that too, because personally, it actually happened in our family. So my stepfather was 17 years older than my mom. And because of the dementia, it caused her so much stress, and she was really challenged through the whole ordeal. And at 92, he was still 6'2", 220 pounds. So traditional caregivers trying to transfer him to shower, to bathe, to, you know, even the recliner was a difficult challenge. And the sad part of the story, and we lived it, is my mom passed within 18 months of him passing away. It had really shortened her lifespan because of all of those challenges of us all, the whole entire family, including her, trying to get him through that period of time. Really difficult.
And one thing I would say is, you know, that it can be a tough conversation to talk to people about, you know, it's one conversation is death, and that's a difficult conversation in itself. But it might be sometimes harder to have this conversation when you're talking about kind of real world implications of not having this protection. And, you know, Della, the way you just described, you know, these are not things to gloss over. And so what I would say is be honest with clients when you're talking about this. I don't want to say be explicit or crazy descriptive in a way that, you know, is uncomfortable, but be honest about the realities about, you know, what they might face, and make it pretty clear that it growing more and more, it's not a might that they face, and it's not a maybe that this is something that they're going to deal with. It's almost becoming, you know, pretty much a fact of life now. And this protection can be invaluable just in peace of mind. Forget financial. Just knowing that you have this kind of backup if and when this happens, to me, would mean the world. So, Della, thank you for sharing that. That's
yeah. And real quick, just John, to play into what you were saying, I think specifically with Lincoln Money Guard's product, like it negates the whole argument of using it or losing it. You know, with traditional long-term care policies, you're paying into these policies that the clients may never actually use, right? They could die of a heart attack and never actually use the traditional long-term care policy. But at least when you're combining it with a life insurance policy, you're locking in your premiums, which I think is the most important thing here. And then you're also, the same side of that token is that you're ensuring that there is a benefit for maybe yourself or your beneficiary. So it's not a waste of money.
Yeah, I'm actually going to come back to that, Nicole, in a couple of slides, because I'll tell you what you said right there. That was really riveting, actually. So, and Della, I do appreciate you sharing that information with you. And actually, I have it's kind of a similar situation to share with you as well. But as far as the financial risks of becoming like a caregiver, I kind of wanted to jump over the last slide that had some of the LTC costs on there because it was actually from about 2017. And the only thing good from reading those numbers is that costs, at least I know in California, are going up almost close to like 5%, which is obviously going to be higher than inflation. So really the only big thing to get from that slide is that LTC costs are rapidly going up, right? And I think we kind of all know that quite a bit. But as far as financial risk for becoming a caregiver, I think this is a slide that I usually get information from and use for client workshops specifically, because I usually get a lot of kind of ahas on the virtual client seminars from those individuals. But just going through this, 50% of working women interrupt their employment of care for a relative just to be able to take care of that individual. Only 13% of workers have access to paid family leave. And of course, sometimes they're going to be taking lower retirement income whether that's for pensions or Social Security, just because of their changes and maybe a full-time position to a part-time or what that might entail. Right. So for my personal situation, so I eventually was able to talk to my mother, and she was able to get MoneyGuard the solution. This was some time ago. And even though I consider myself an amazing wholesaler, it did take me about 5 years. I'm not proud of that. But eventually she came around and said, hey, you know, what's that MoneyGuard thing again? And then, you know, the rest is history. But the reason why it was important for me to, both my mother and father have it, by the way, but it was important for, make sure for them to have it. One, they're divorced, but I really pushed it on my mother because she has 6 sisters and a brother. And when she was taking care of her mother, I remember the kind of family dynamic that was so interrupted just because there was not a plan. So a lot of individuals would try to figure out what to do, and at the end of the day, did not come up with a great plan for everybody. So in summary, what happened was that because my Aunt Bibi was a nurse, all of the burden fell into her lap. So they said, you're a nurse, you can take care of mom. We'll kind of help you out with payments and whatnot. We're not going to have a set up strategy. We're just going to kind of come around, you know, once or twice a year and figure things out. And because there was an absence of a plan, right, there was literally no sort of logic around who did what when. And it actually caused a lot of bad things. One of the most important ones was that my Aunt Bibi just went through a divorce. She had 3 kids. She was also a full-time nurse, and she had to go from part-time, right? So think about doing that and taking care of 3 kids. So talking about mental stress, I have a lot of respect for her. But if we had something like MoneyGuard, it would make a lot of sense. So once I was able to kind of connect the dots there to my mother, then it kind of made sense that, okay, this is something that I should have, just because it is a guaranteed solution. So I can use it if I get sick, but you know, if I don't get sick, then you know, it's still going to be something that's going to be there for me. An essential part of my portfolio is kind of what she said verbatim, not my words, her words. So it was good that she kind of understood it from that standpoint. All right, so going a little bit further here, I want to leave some time to kind of go over what I want to chat with you about for MoneyGuard. So from a general standpoint, there's basically 2 ways of having this conversation. I don't know if you've actually got a chance to even think about it this way, but there's the emotional approach. And I'll go ahead and tell you, when it comes to MoneyGuard, I think the majority of the time, this emotional approach is going to make sense, right? If someone has experienced long-term care, like my mother, if someone is open and social, and you know they're open to talk about their family, right? You're probably going to get a lot more constructive conversation. I think that's really where we see this conversation blossom, right? And you don't really need facts here. All you really need is stories. But there is the balance approach, which is, I get more factual, if you would like to go down. And I don't want to say that the balanced approach is a bad approach, because I personally don't like statistics. However, because a lot of times when you bring up MoneyGuard to someone, it's probably going to be the first time. It's usually an educational discussion. Instead of just throwing facts at someone, it's just saying, do you know your LTC options? Have you ever experienced long-term care? Do you know how what the percentage is for needing long-term care, that sort of thing. So I don't think it's as bad as you think, but those are the 2 different approaches to the conversation. All right, so this is going to be the different options for long-term care. Our competitive team kind of put together this little pinwheel, and I try to use it as much as possible because it does a good job of saying, all right, here are the 5 options for long-term care. And I remember from the polling question that, what was it, 87% of you said, yes, you know about all these solutions. So I'll run through it pretty quickly. But as you can see, from self-funding all the way to traditional long-term care, it will show you how much LTC coverage is going to be within each option, right? Of course, self-funding makes sense. Again, in my opinion, that's a default plan. All right, so essentially you're just going to the bank and writing a check whenever you need it. It's going to be susceptible to a lot of market volatility, interest rates, and everything else. It's not a guaranteed plan. The annuities with the LTC riders, those really haven't evolved, in my opinion. So the annuities is an income generated vehicle. It's supposed to be used for income generation, but they're adding on these nursing home riders and LTC riders. And honestly, they just changed the name to them. They're not actually getting much better. Essentially, you just kind of get 2 or 3 times what you would already have in that income to use for long-term care. At certain ages, it's actually very good. But from a general standpoint, they really haven't been evolving too much. Now we have the life insurance with the ABR riders, right? Obviously a huge life insurance component, long-term care second. And then you have the life insurance LTC combination products where long-term care is first and then life insurance is second, right? And then of course you have traditional long-term care. And MoneyGuard does a good job of just being a more dynamic way of paying for long-term care expenses. And it's also the fastest growing area as well. So just a few things to touch base with you on. I do want to open it up for questions and everything else here in just a bit. But so right now we have MoneyGuard 2 in California and New York, MoneyGuard 3 in all the other states. The story stayed the same, even though we've had some changes price-wise to the product. But the good thing is that, and this is something that Nicole said earlier, and I told you I wanted to bring this up again, but despite COVID, despite a lot of uncertainty, I think with people being isolated to their homes, I'm actually, I don't know about anyone else, but I'm talking to my family more than ever. Before, I feel like I might have talked to my own father maybe once every other week or something like that. Now it's like every day. So, and we're talking about wealth and health.
Yeah.
And right now we're seeing a lot of market volatility. Obviously, we experienced a down market. Since MoneyGuard is guaranteed, and just like Nicole said, right, you're locking in your benefits with this. People are still talking about MoneyGuard, right? We're still having actually a great year talking about this solution to more and more people, because again, it's still a new topic to a lot of folks. But the story is still the same, right? Long-term care benefit if you need it, death benefit if you don't, both guaranteed, tax-free benefits, doesn't matter what happens in the marketplace, and you also get a money back guarantee or options anyways, right? We changed it to 70% for basic if you want the most long-term care benefit, and then 100% vested for more liquidity. And we even have some people get 2 MoneyGuard policies at the same time, and they'll have the vested ROP on one, and then they'll have the basic on the other, just to be able to give them some more diversification. So that might be something that you do kind of on your next illustration here. But these are the advantages for MoneyGuard, and I like to talk about these because people don't talk about them enough. I think people say, all right, MoneyGuard has those 3 benefits, they're guaranteed, tax-free, you're good to go. But we are still in the industry with 0-day elimination period across the board for any covered service. That's huge because a lot of people do start and then go off claim within even finishing their elimination period. I think it's about 26% of people do that. So a 0-day elimination period does help out, especially with a product that you can start and stop benefits whenever you want. We do have direct billing. We even have international direct billing. So as soon as you go on claim for MoneyGuard, what that means, it's almost like when you go to the dentist office, right? You walk in the dentist office, they take care of you, you walk out, you set the appointment, you don't even sign anything, right? And then you get something in the mail that says, your appointment has been paid for, you're all set, right? That's kind of like the direct billing. You just go on claim with us, and then everyone just sends us the bill and we pay it directly for you. So, and of course we keep track of everything as well, just in case if you need that paperwork at the end of the year. We do have affordable options for younger folks. So of course we have our single pay. People can pay over up to 10 years as well, but we do have extended flex pay. And a lot of people forget about this. So in California, the youngest age is 40. So we can actually do a pay to 65 where you're paying into MoneyGuard for 25 years, if you're talking to younger clients. So that's something else to obviously consider, because we can even do monthly pays. So you can actually see ways to do what I like to say is a contribution, right? Doing a contribution to your long-term care strategy. You might start off younger, right? And you might say, why would I talk to a 40-year-old about long-term care? But why wouldn't you? Because they're going to be putting in, let's say, $300 a month. And when you lock in those inflation protection and the guarantees and the tax efficiencies, that $300 a month can turn into $500,000 of long-term care by age 80. Those are fantastic numbers. I don't care if you're 40 or 20, like you're going to love being able to see those guaranteed numbers in your portfolio. The post-issue support for MoneyGuard. I wish I had the whole call to talk about this, but we have Lincoln Concierge Care Coordination on every policy. I started doing calls to folks that place business and just say, hey, do you know what this is about? Would you want to set up a call with your clients and make sure they get registered? Because this is what turns MoneyGuard, the solution, into a care plan, right? Literally, there's a button on this thing that says expert help. And I kid you not, it doesn't matter what sort of question you have or if you have nowhere to go, you can go onto this, click expert help, and then you're connected free of charge to a care advocate that can walk you through anything. And of course, you can call Lincoln too. We have care specialists that have backgrounds as far as being registered nurses that can help out with any questions as well. And then of course, obviously all the covered services. One thing I do want to point out here as far as an advantage, we have something called alternative care services. We're changing that verbiage around, but essentially the alternative care services it basically fills in all the gaps between home health care and any sort of facility care. So if a new topic for long-term care, a new category for long-term care was created tomorrow, like let's say they're working on like robotic care. So if that is actually solidified as a LTC category tomorrow, MoneyGuard will cover it. So always make sure to mention that during client calls as well. Essentially, we're basically there for you to try to make sure that everything does get covered. So that, that was essentially everything I did want to go over with you. I just want to make sure that I didn't forget anything, and I don't think that I did. But again, I did want to put my contact information up here. If anyone's working on something right now, we have made a change in internal contact. So if you worked with Josh Ford before, now the internal is going to be Andrew Kolodin. This is his contact information there along with mine, but we'd love to be able to help you out with any questions you have on this presentation or anything specifically that you might be working on. But with that, I'll turn it back over to Nicole and John.
Lee, thank you so much. Again, can't thank you enough for your time here and your expertise with this. One thing I want to talk to you about just very briefly, Lee, because we want to wrap this up quickly, is some of your co-brandable marketing materials based around marketing LTC to women. Again, this is a conversation that needs to happen, but the key is how to kick it off. Lee, you guys have some great materials that you've shared with me. Is that something that agents themselves can reach out to me or can reach out to you for and try to get some actual, either physical or email materials?
Yes, certainly. Yeah. I know there's some follow-up material that we're going to send out, but we just changed systems to an updated digital marketing center. So we actually have brand new pieces for that. And they should be available pretty soon. But yeah, please reach out to me for that. If I can't get my hands on them today, as soon as I can, I'll make sure to send them your way. And it'll be good information too if you wanted a topic for Long-Term Care Awareness Month in November.
Oh, maybe we should have held this then. Lee, again, thank you. Would love to open the floor to any questions at all. If you have any questions, raise your hand or unmute yourself and hop in. Della?
Yeah. I have an agent that's on the line with us today that had a couple of questions he was chatting and sharing with me. We're trying to find out specifically, and I always like to confirm since each carrier and each product is different, with regards to premiums due. Lee, if we are doing a 10 pay and we have made 8 premium payments and we go on claim, are the final premiums waived? Are they due later at some point in order to keep the policy active? Can you please share with us?
Yeah, Della, that's a great question from the agent. And I'll give you the compliance answer and I'll give you my answer shortly. The compliance answer is that once you start making the payments, we do want you to make all the other payments for MoneyGuard. So in other words, there's no waiver of premium. However, you do get the full benefit for long-term care day one. And if, let's say you put in 1 premium and then year 2, you pass away, we'll give you the full death benefit and then the policy is just going to cancel. Of course, you don't owe the other 9 payments in that example. Now, for your example, so if you paid 8 and then you had 2 more left and then you went on claim, technically if you are confined to a facility, MoneyGuard will pay out all the benefit, even if the policy lapses, until it's done, as long as you're confined to that nursing home. So if it was, if it was my mother that, went to a facility, I would probably tell her not to make the other 2 payments. So.
I see. Okay. Good to know. The other question with regards to the international travel that you touched on briefly, I believe specifically for MoneyGuard, you have access to part of the benefit pool, but not the entire pool if somebody chooses to do their long-term care in Europe or Canada or something like that. Can you clarify, Lee?
Yep. So in California, it works a little bit differently. So you basically have access to the amount in the LABR, which is the first rider. It's either going to be 2 or 3 years, and that's a minimum too. Also, inflation protection does apply to international benefits, so money will still grow while you're international. And you basically can use up to 100% of that monthly benefit, but essentially your long-term care benefit almost gets cut in half. If you do international, but again, you are eligible for that entire benefit, and it's only for a facility internationally, so it won't be for home health care. However, if you do come back to the States, and I talk about this folks a lot because people are like, oh, well, I have family in Mexico, so I might, be over there and I can come back and forth. If you come back to the States, then your benefit's full again.
Okay. Thank you, Lee. Thank you, Lee. And one other question, and I'm not quite sure that I can logically kind of understand it, but I wanted to make sure I put it out there too. If somebody cannot perform 2 of the 6 adult living requirements and are on claim, are there any other restrictions? He wanted to know specifically, are they able, would it be okay that they travel, which I believe is not an issue, but also maybe still capable of driving? Does that make any sense? Is that feasible?
Mm-hmm. Yep. No, that definitely makes sense. This is the answer to that. So that's a good question because it actually comes up a lot. So there's no Lincoln doctor and there's no Lincoln claims adjudicator. So based off of what their personal physician says, basically what's going to happen is that they'll put together a plan of care or they won't. So if they do put together a plan of care, that means that you are deemed needing long-term care, whatever that definition might be. It could be cognitive related, it could be because you can't move around or dress yourself. But there are people that still have normal function that are on claim for MoneyGuard. We have someone that literally just uses a home health aide 2 hours a day to help them dress, but they still do everything else and are actually still working too. So it depends on the conversation they have with their personal physician.
Got it. Okay, perfect. Thank you, Lee.
Mm-hmm. Yeah, thank you.
Della, thank you so much for those questions. And again, for sharing your personal story. That's one thing I want to kind of leave off this conversation with. And again, thank you to everyone who joined and especially to those who contributed in any way. But this is, again, a sensitive topic, but an important one. And it's, to me, hearing Lee's story, hearing Della's story, knowing, my mom is 73 years old with COPD and emphysema. And I will tell you now, kind of like Lee said, it's tough to deal with this between my sister and I. And it causes some tough conversations to be had. And had we had the foresight and had I been in the insurance industry early enough, maybe I could have, taken advantage of this product or any LTC product. But again, this is an important conversation to have. And the way you have the conversation is by being open and honest about what's happened in your life and the people that you know. Because I think, again, as we go forward in this crazy world, I think it's almost not if there's going to be an LTC event. It's a when for pretty much everyone. So Lee, again, can't thank you enough for your time. Nicole, thank you so much for putting this all together. And we want to say we're only going to have one more presentation with this initial Make Your Mark series. And that's going to be in about 2 weeks. We're still deciding whether it's going to be a review of the Secure Act or the importance of policy review. We're still kind of trying to figure that out. But I just wanted to let you know, coming up in early November and mid-November, we're going to have presentations on premium financing. We're going to have a presentation on annuities. And we're also going to try and plan something on brand building and, brand marketing building. So we have some great stuff coming up, guys, at Watermark Life. We can't thank you enough for your time. I'm going to let you guys go. Nicole, thank you again. Lee, we're going to share. If you have any questions, reach out to Lee, reach out to me at john@watermarklife.com. And we'll probably follow this up with some marketing materials that Lee's going to share with us and already has shared. And again, if you have any questions about how to get this conversation going, please reach out to us. Thank you so much for joining.
Thank you, everyone. Take care. Have a great day.
Well,